Now, there's no doubt that the housing market today represents a very different scene than the frenzy that we saw over the last couple of years. In fact, the shift we've seen in the market over the last 6 months has represented something totally different than what we've been used to. This has had a lot of people on TV and in the media trying to make comparisons to what happened back in the crisis of 2008. Is that really likely to happen? Are these scenarios similar? Stick around, we're going to get into that today. Hello Central Maine, welcome back to the channel. It is your realtor Nick Isgro with eXp Realty, and as I just stated at the opening, today we're going to break down some of the comparisons between what is going on in the market now, what the details look like versus what happened back in 2008. What did that look like? And also we're going to talk a little bit about some local data here right in Central Maine, so you have a good, very clear picture of how this is very different than what happened back during the financial crisis. Now, before I get into that, I want to welcome you here to the channel. If you've never been here before, we cover all things real estate here in the state of Maine, but particularly right here in the Central Maine market. Now, if that's of interest to you or adds value to your process in the buying and selling of homes, do me a favor, go ahead and hit the like button on this video, hit subscribe, knock that little alarm bell. You'll be notified every time we put out new content. Now, before we get into the local data, I'm just going to keep this really direct. I want to bring up a graphic here that's going to break down some key market indicators from the previous housing cycle back in 2008 to the current housing cycle, so you can see very clearly the differences between then and now, or maybe even some similarities. Let's bring it up and check it out. All right, right out of the gate, let's take a look at job losses, because in order to have the kind of flood of price reductions that people are calling for, if they're talking about trying to compare this to maybe what happened back in 2008, we'd have to have a drastic number of job losses, not only in one sector, by the way, of the economy, but in the upper, middle, and lower income categories. Now you can see overall in the 2008 cycle, we had about 8 million job losses. Currently, there's really no major job losses that we can speak of right now. Yes, you'll read some headlines of layoffs, but you're not reading the headlines of jobs that are added. The net effect of the economy right now is that there really are no major job losses happening here across the country. In fact, if we look at the total jobs numbers back then, and remember this is less than 20 years ago, we had about 138 jobs here in the country that were being counted. This housing cycle, 158 million. So that's a 20 million job difference between then and now added into the economy without that 8 million job losses. So where those are going to come from, I don't know. Of course, anything could happen, and there is talk of a recession, but not every recession sees what we saw in 2008. In fact, if you look over the last several recessions the country's gone through, very unique situation based on a set of circumstances that are in some of these numbers that we're going to continue to look at here. First up is going to be subprime loans. As we've talked about many times on this channel, subprime lending was one of the key factors that led to the economic housing crash back in 2008. Because of that, because of what came out of that, the regulatory restrictions, what banks went through between then and now, there's really not any subprime lending going on. I'm not saying that there's a zero factor in the market, but relatively speaking, it's just a non-issue comparatively to what was happening then. The lending standards have been tighter, credit has been tighter, and the people who are getting the mortgages over the last 10 to 12 years have been far more qualified than what was happening before that crisis. Now, new construction is going to be another thing we want to look at. If we look at new construction, there was a flood of new construction leading up to those higher housing numbers that helped flood the market with inventory at the time. You can see we're millions short on inventory comparatively as we look at this current cycle. And as we speak now, there's really no flood of new inventory coming on the market. Yes, you'll go around here in Central Maine even and see some homes being built, but compared to even a few years ago, the construction that is taking place is just not happening at the rate that it needs to even keep up with any kind of normalized demand that's in the marketplace, which is why, by the way, rents are skyrocketing and housing is short. Last couple of things you want to look at here, you can see that we were millions and millions higher on the home inventory, and we're going to get into that when we break into the local stats to show you why I don't think even with higher inventory numbers, higher market times, we're going to see some kind of flood of inventory. But also look at the delinquency rates. Delinquency rates over 10% on home mortgages in the last cycle, 3.5% this time. And if we look at the percentage of homes in foreclosure, there was almost 5% of homes in foreclosure headed into that last cycle, less than 1%. So we're at 0.6% of homes in foreclosure now. So obviously, looking at these numbers, you can see There's a huge difference between the lead up to that last economic crisis and what's happening now in the market. Now, what is going on here in Central Maine? Because this is going to be important for you, because obviously different areas of the country are going to be affected. I'm sure there's some overheated markets that are going to see a lot more cooling than we see here in the Central Maine area. But what's happening? What is putting pressure on the prices, or should we say, what is the lack of pressure on the pricing, considering that prices remain relatively high, although we have seen some price reductions over the last couple of months. Over the last 30 days here in Kennebec County, right from the time this video is being made, if we count back 30 days, we've had 85 closed residential sales. At the same time, we've had 65 new homes come onto market. 47 of those are already under contract. So where the inventory is going to come from, I don't know. Yes, we're seeing a little bit longer market times. Yes, we're seeing some moderation and normalization as far as negotiations on homes, pricing on homes. But as far as any kind of major shift, outside of a more normalization of the process, I just don't see it happening, because if you're a buyer coming into the market, do you have more time to look at the house? Yes. Are you going to negotiate when you come to the table? Most likely, yeah, depending on the home that you're looking at. However, you can see there's just not a huge push for new inventory coming on the market, and we're still in that pattern where as inventory is coming on, the vast majority of it is eventually going under contract and getting sold. So that's it for this video. Just a really quick video, because I keep hearing this over and over again of people saying, well, when we have the big crash, like back in 2008, I just don't think it's going to happen. My prediction over the next year, at least here in Central Maine, we're probably going to see fewer residential transactions, meaning fewer homes coming onto the market, meaning fewer closed sales overall. But what's going to happen is the majority of those homes that are coming on are going to sell. I think we might see a little moderation in the pricing. It won't be as aggressive as last year, especially as we move out of that scenario where you had, 20 or 30 offers on every house. But it's going to be more of a normalization of the market. I don't see a big price reduction coming, and I certainly don't see any crash coming anytime soon. So that's it for this video, guys. If you are in the market now, if you lived through 2008, especially if you remember all of that, go ahead, drop a comment below. We'd love your comments, your thoughts, maybe your fearless predictions even. Would love to engage with you there. Of course, if you are in the market and you're looking for a real estate professional to talk over what your specific situation might be, all of my contact information is linked in the post below. I promise to get right back to you. Of course, as always, guys, I thank each and every one of you for sticking around to the end of this video, and until the next one, see you next time.